Boom, we are alive, ladies and gentlemen. Thank you for joining us today. Just a quick little rant, but before we do that, if you're new to this channel, remember to subscribe, give us a thumbs up, and leave your comments down below. Today we're going to be talking about the Federal Reserve and their recent comments on their ideas of reducing their balance sheet. Now, they'd already talked about easing. They've been buying around $120 billion in mortgage-backed securities and a few other assets, primarily mortgage-backed securities. And this last week, the Federal Reserve came out and agreed that they were going to trim and reduce their balance sheet by around $60 billion per month of their treasury holdings and around $35 billion a month in its holdings of mortgage-backed securities. So these amounts are supposed to be phased in over a period of 3 months, effectively starting around March 15th, 16th, they had their first meeting talking about the easing and then also the reduction of the balance sheet. Now, one of the difficult things here is to understand that the main reason why the markets have gone up since the beginning of the pandemic is because the Federal Reserve went on a massive printing spree, giving out basically zero interest loans, emergency loans to businesses that needed it as well, and flooding the market with this kind of easy capital. And this is one of the difficult things. People think inflation or the prices of things going up is the cause, and it's really a symptom or a side effect of this dilution or the disintegration of the trust in the underlying currency and financial system. Over the last few months, we've seen sanctions put on Russia, and we've seen the importance of a crisis asset. Now, if all of a sudden you happen to be deemed the other, an asset that you can travel with is extremely important. Now, the Federal Reserve and the US dollar are probably going to be the cleanest sheet in the dirty basket of laundry, and therefore it's going to get a longer run than anyone probably would have anticipated. If they start to reduce their balance sheet, it's likely it could strengthen the dollar. Now, this is massively detrimental for third world countries around the world. I have friends in Sri Lanka who've been talking about the food riots, the fact that they're short on diesel, there's no US dollars left in the country, so any of the inside currency that you could trade for US dollars is not available. So what it says on the currency exchange is around 50% lower than what you're actually able to do on the street by going to an ATM, which has no US dollars, taking out the local Sri Lankan rupee, trading it for dollars, and you're at a 50% premium over top of the FX currency exchange. And these signals kind of shooting on and off the board is one of the things we talked about when we're looking at crisis in general. Now, these indicators, or our dashboard of market gauges, have been kind of going off the charts for the last few years. Now, when they started quantitative easing back in 2008 and really started to stimulate the economy through massive amounts of printing and then also treasury and mortgage-backed security accumulation, you have to ask yourself, who's on the other side of this trade? Now, ultimately, will this kind of wreck Bitcoin or crypto? And a big part of the answer is yes. If and when the Fed starts to reduce its balance sheet, there's really nobody on the other side of the trade. There's no one that can absorb that much liquidity other than the Fed. People are much too smart with their money to do something like this. And that's one of the reasons why printing capital or such low interest rates is a basically horrible idea. It incentivizes corruption, malfeasance, and poor business practices because they are allowed to operate almost with carte blanche, effectively. The reason being is because what would normally keep a proper business afloat based off mission, vision, is also its calculability to be profitable and then accepted by the community for what it's building. Here we've been stimulating companies, the banks, including the central banks, effectively, when they've done nothing and only take. One of the most important aspects to understand then is that Bitcoin is alleviating a lot of these troubles, and although there could be volatility, we could see swings in prices, and we're going to see abstract things happen. When you move into a market liquidity event like Bitcoin is currently in, where the supply is very low, the price is going to move either way and very quickly based off that limited supply. So right now, we've seen a constant decrease of the supply in the market effectively since March of 2020, when the final supply hit the market. We've seen a total decrease since then. And we've started to see longer term and larger wallets accumulate. I think, again, effectively, bigger players are starting to recognize that history effectively repeats itself, and governments have done the same thing over and over again, which is destroyed the underlying trust and backing of these currencies. So the fact that the Russians are going to I think, going to potentially try to back their ruble by gold. You're going to see other countries do this as well. I think they've missed part of the point. The technological advantage of Bitcoin as a backing is that we don't have to trust some third party about a transaction. It's visible on the blockchain. Bitcoin was never meant to be private. One of its key features was actually transparency, that we could see where everything was. And this is a hugely important factor when it comes to accountability, governance, or business, or a practice of the state in any way, shape, or form. So it's not that we need it to be private. Again, the transaction history is what makes it useful to us. There's a lot of loss within the ecosystem that we have, and they'll try to ding you for some $1,000 thing that you did. Meanwhile, billions of dollars of fraud have taken place in the 2008 banking crisis, and nobody went to jail for this. So you have to remember right now that we're living in an age of corruption, and although the US dollar is the dirtiest the cleanest piece of clothes and a dirty ass basket of laundry, when we're in this time of crisis, if the Fed starts to reduce this balance sheet, we could see the S&P, we could see Bitcoin, we could see everything start to drop. Now, ultimately, I'm optimistically cautious here because I think a lot of the big players who are smart enough and have the balance sheets to do so have recognized this and already started taking positions. Elon Musk, Michael Saylor, there are many more to come, understanding that an asset non-tied to a government instability over time is actually one of the best things we could have all hoped for. So I think this is going to slip up the market a little bit here, but this is kind of the supply test we were looking for. Ultimately, if no new supply comes on the market for Bitcoin, we're just going to see a continual price movement up and onwards beyond the $50,000 mark. And again, we have to point out that if you're in an over-leveraged or overbearing position, this is not how you should be building your portfolio. If you're losing sleep at night because of these fluctuations, you're doing it wrong. Ultimately, going to the gym and investing in something similar, or really anything you like to do, it should be done repetitiously, and from there you get a much better grasp on how things need to be done. If you're trying to get in and out and flip here and double there, you're likely ultimately just going to lose. And one of the reasons why we keep showing up in this channel is to help other people not make the mistakes that we made so early on that really cost you a lot, especially in your early days when all you need to be doing is effectively accumulating the things that you're interested in. And every month that you show up, you can increase the conviction that you have in each of these investments and also your interest. Perhaps 2 years down the road, you find something significantly more interesting and you want to focus on mushroom hats, then that's what you should be doing. Anyways, just a quick brief overview of the Federal Reserve here. They're basically our composite operator. So if they decide they want to start buying and selling some inordinate amount of securities and treasuries, then the market might want to look out, because there's probably no buyer on the other side of that, especially right now in crisis. So we're going to see some really interesting times up ahead. Ultimately, I think the thesis is the same. It just means that over the next few years, we're going to have volatility that could make your head spin. So make sure whatever position you're in, you're well suited to be there and suited to be there for the long term. Steve with the Arcane Bear. Again, give us the thumbs up, comment, like, subscribe to the channel. We just set up this new little spot, so hopefully do a little bit more videos where we just rant for a few minutes. I've been trying to figure this one out for a while now and still haven't quite nailed it, but we'll see where this goes. Yeah, actually, maybe we're going to try something a little weird here in the next few weeks by posting videos on a different YouTube channel or something. I think a bunch of years ago they dialed my YouTube channel back, and I want to see if that's the case. So maybe we'll start we'll start some other conversations in another area just to see what happens with videos when we post them and share them abroad. Thank you guys for making us this far in the video. If you have, almost 10 minutes now, and we'll see you again on whatever time we've managed to make another video.